which we are going to have. Of course, we have many topics conducted in CII, particularly on taxation, on economy, on financial markets. This is one of the very interesting topic I could see from the even at the participants level, because whenever we used to conduct on investments or some taxation and GST, we used to have a participant ranging from 100 to 150. I could see now it has gone up to 282 and it is further going up. So it shows definitely the speaker as well as the topic which we have chosen is quite will be a very interesting one. So I would like to, before I take more time on this session, I would like to introduce Mr. Sundar. He is one of the biggest independent option traders in India. Mr. P.R. Sundar always had a thing for numbers. In fact, he started out as a mathematics teacher a few decades ago in Gujarat and in Singapore before venturing into stock market and becoming a full-time options trader. He frequently appeared in regional Sun TV and national TV, CNBC TV 18, CNBC Awards channels on prime time. He has also been a prominent speaker in major conferences held in the past with regards to investments and trading. While his paid workshop has been a turning point in the careers of over 2,000 traders, he also shares his unparalleled experience in the stock market, particularly in the field of futures and options, for free of cost with lakhs of people on a daily basis through his YouTube channel, which has garnered over 7.6 crore views and 7.25 lakhs subscribers in just 18 months. So definitely that means he is a very interesting personality, as well as his views are all viewed by many people, not only in India, I think many continents. I can see with his views, I think many of us could have been a millionaire now by this time, because 18 months, the stock market also has gone up phenomenally. And so without having much time, do we have Datta in place, Mr. Mariappan?
No, sir. No, sir. Thank
So,
you.
okay. So with this short introduction, I would like to hand it over to Mr. Sundar, the floor, and warm welcome, Mr. Sundar.
Thank you.
Thank you, sir.
Yeah. Mariappan, do I have permission to share my screen?
Yes, sir. You can, sir. You have the.
Yeah. Okay. Right. Hi, this is P.R. Sundar. So welcome to this special session. Just to introduce a little bit about me. So I'm a mathematics teacher turned a stock market trader. And though stock market trading is my main profession, being an option seller, I'm sure most of you must be aware, for option selling, you don't have to pay the cash upfront to the exchange. All you have to give some kind of collateral to the exchange. That collateral can be in the form of fixed deposit or some shares or mutual funds or anything. So though my main business is selling of options, but for that I need capital, and that capital need not be paid in cash to the exchange. It can be invested. So therefore, I must know about the investments also. So this is how I started learning investments. And before that, just to give you some historical background. Probably the commerce students may know, but other than that, like science students or art students, they are not taught financial planning in the school period. So financial planning is something very, very important. And it will make all the difference to your life if your planning is very good in finance. When I was a small boy, I used to think, like the heroes in a movies, they must be getting very good money, they must be enjoying the life. But we know that there are some big heroes and heroines in the movie industry, though they are so popular, so they were getting a lot of money, but they lack the financial planning, so they ended up suffering in their later stage. At the same time, there are few people, who are not the heroes or who are not highly paid, some small time actors or some side role, some comedy actors, and their financial planning is very, very good, and they have done exceedingly well in their life. Just to quote one example, there was a movie actor called Aisari Vallan, who used to appear in some small roles in MGR movies. And now he runs a university in Chennai, called Wells University. So more important in our life, every one of us do some business, every one of us need some money, or every one of us has some surplus cash at certain point of time. So how that can be invested, and particularly to create a passive income, not necessarily active income. Say, for example, just a few days before, and I posted a video, and I decided to buy a Mercedes-Benz S-Class, for which I set aside 2 crore. So then my wife told me, you have enough money, and you just pay the total money and buy the car. Why you want to go for a loan? So I told my wife, if I take a loan, and I'm going to pay only 7% interest for the car loan, and that money, I can put it somewhere else where I will also be getting around the same 7% interest or 7% return, we can say. And then that instrument can be given as a collateral to the exchange, and some profits can be made through the trading. So that will be helpful for me to pay off the loans quickly. So at the end of 2 years or 3 years, I might be having the car also. At the same time, I will be having my 2 crore cash also. So this is one financial planning. So later I'm going to explain what I did, how I did, and how I'm getting 7% return, and so on, everything. And simply putting, so there are opportunities, and there are better opportunities from one opportunity to another one. So how we deploy, and we can make some extra money. And sometimes when you are operating on a bigger scale, even some small changes, it can make a big difference at the overall financial level. I'll just give you one simple one, what I studied in 12th standard. So I'm giving you a sheet of metal. So you have to make a shape, and whatever shape you want. So I want to put the juice into that. Let us say Coke or Pepsi. So I want to sell it. And can you imagine Coke or Pepsi? They produce millions and millions of cans per day. So they put a lot of research to find out which shape is the best shape. So you have to use the least material, least metal sheet. Why you have to use the least metal? Because you are going to make millions of cans per day. So even 1 square centimeter saving will run into 1 million square centimeters. So you have to use the least surface area, mathematically speaking, but in a layman language, you have to use the least material. And the shape that you are doing, it should be able to hold maximum amount of volume. That's why you can put more juice. So least surface area and maximum volume. So which shape is the best? So mathematically, so they found out, and it was a topic in 12th standard mathematics called maxima minima. So they found out that spherical, a ball, that is the best possible shape that will have the least surface area that can hold maximum volume of juice. But of course, practically you cannot make spherical ball shaped cans. Transportation, moving, it become very, very difficult. Then they found out that the second best shape is cylindrical shape. And that is why you just look around, most of the things in your life, in and around you, they all will be in cylindrical shape. Look at the gas cylinder. You look at the utensils that your wife is using in the kitchen, and you look at the dustbin, you look at the Coke can, you look at the bottles. So everything comes in the cylindrical shape. So that is because the least surface area, the maximum volume. Why we need least surface area? We have to spend money for getting the material. And just see how people think. And if you see the square type box, it will be much easier for stacking and transporting. But despite that, they don't do that. They do only cylindrical shape. Because a lot of research is going into this. So why I'm giving this example, a small change, a small thing that you change, it can have a bigger impact in your financials if you are operating on a bigger scale. Then you look at the way some people are thinking. There's one guy who thought, why are we going for cylindrical shape while the spherical shape is the best one? Because the spherical one, you just cannot transport it. You cannot put it on the table. It will roll around. So it needs to stand on firm. That is why we are going for cylindrical shape. Then somebody thought, okay, cylinder will be flat at the bottom, flat at the top. We want the stability to hold it on a surface. That's why we keep the bottom flat. Why we have to be keeping the top also flat? So instead of keeping the top flat, so they put it as some sort of a hemisphere. So you go and see all the syntax tanks that are there on most of the terraces in the houses. You will see there will be cylindrical shape, but the top will be some kind of hemisphere. So that will hold more volume. So as a science guy, so I just explained to you something, how much research is going into maximizing the usage while minimizing the expenses. So somehow I feel that, so this kind of research, so this kind of awareness is required even in the financial markets. So I know a lot of people, and particularly companies like MSMEs and other companies, you are not allowed to keep savings accounts. At least if you have a savings account, if some surplus cash is there, so the cash is lying, it will earn some interest. But the companies are not allowed to open a savings account. So you are allowed to have only the current account, where if you have any surplus cash, you don't get the interest. Then what is the most alternate people are thinking? So they think of fixed deposit. There are some shortcomings in the fixed deposit. And you will wonder, in fact, this is the first time I'm seeing this kind of things in India. Many banks offering lower rates for fixed deposit than the savings rate. So recently, I wanted to place some FD, which is more than 3 crore. So I was looking which bank offers better rates. I saw this bank, RBL Bank. They are offering a very good interest rate for savings account. For savings account, they offer about 6%, 6.5%. And when I called them, so I want to place a FD for about 5 crore. And they said, sir, we will offer 3.8% as the interest. I said, for your savings account, you are offering 6.5, and fixed deposit, you are offering 3.8. So it looks illogical. So then they said, sir, this is a bulk FD. So for bulk FD, so our treasury department decides the interest rates. So FD rate of interest will be only 3.8%. So I think later when I checked, I think that is the case with many banks. For bulk FDs, typically for more than 2 crore, 3 crore, they even offer lower interest rates. So even I may be a senior citizen, but still only in my personal account, I can enjoy the senior citizen rates. But our company account, no, we cannot. So this is one thing. Second problem is that being a company, we may need funds anytime. So once we lock our funds in fixed deposit, then if we need money, then, you know, they are already offering 3.8% interest. Then after that, if you break the FD in between, then there may be some pre-closure charges. So at the end of the day, what you get? Nothing. So in this session, I'm just going to share with you what are the other possible avenues where we can park our surplus cash, and then there are plus points and minus point and all other things. So that is the objective of this session. Okay, so basically how to improve the efficiency and effective utilization of our funds. So when I said, like, I'm going to buy a Mercedes-Benz S-Class, and by deploying the money in some fixed instruments and then making money from the stock market, so that's a very active. So people say, sir, you know how to take the risk, you know how to handle the risk, but we do not want to take the risk. So in this session, so in the first part of the session, and I'm going to discuss only non-risky things. Of course, we can't use the word non-risky. Even the bank FD is subject to risk. You know what happened to few banks? Few banks have gone bankrupt. So do you know that if your bank goes bankrupt, your fixed deposit or your money will be insured for only 1 lakh rupees? I think recently one Mumbai-based cooperative bank has gone bankrupt. So people had a lot of problem. And then the government decided to increase this insurance from 1 lakh to 5 lakh. So theoretically speaking, even a bank can go bankrupt. It has happened in the past. What happened to Lakshmi Vilas Bank recently? So luckily, these banks were taken over by some other banks. So investors return interest was protected. So maybe more appropriate will be, I can use the word less riskier, not the stock market, not the futures and options where P.R. Sundar is very famous. So we are not going to talk about it. So effectively, if you want to use the funds, so as I told you, FD has two drawbacks. One is lower interest rates, and second one is the liquidity. So I don't have to tell so much about financial world. So anything that we do, we invest. And three things are very, very important. We call it as SLR. SLR. S stands for safety. So the number one is we have to look for safety. And second one is the liquidity. L stands for liquidity. And the third one is return. So return is the last priority. The first priority is safety. Second priority is liquidity. The third priority is return. So if you come to safety, fixed deposit, okay, it's more or less safe. But liquidity, there's a problem. Once you commit, let us say 1 year FD, you have to keep it for 1 year. So liquidity is an issue. So you want to pre-close, there may be some penal charges. And the third one is the return. Yeah, return is also a little bit lower. But apart from the fixed deposit, so there are so many options available in the market. So I'm just going to give you some. So debt funds. Generally, the funds are classified into two. One is the equity funds, one is the debt funds. Equity funds are the funds that are being deployed in the equity market, which will carry the market risk. Whereas the debt funds are more or less like a fixed deposit, and where the risk is much lower. Like how much risk you will have a FD, the same kind of risk may have. So we can say no risk. So there are so many funds called overnight funds where the returns are about 4% per annum. So bank FD and this one is quite similar, but then why we have to park here? Number one, you park the money in FD, the interest that you are getting, so that is considered to be a income in your books, and you will end up paying about 25% tax. Any income that you are getting, if you're a corporate, you know, like it's from 22% to 25%. Whereas if you park the funds in these overnight funds, they are treated as mutual funds. So they are treated as investment. So who knows, if you don't require the funds for the next 1 year, and after 1 year, it becomes a long-term capital gain. If it's a below one year, it's treated as a short-term capital gain tax. So short-term capital gain tax is only 15% versus 25% taxation for fixed deposit. So number one, you get your tax outflow will be less. And second thing, FD, if you pre-close, there'll be penal charges, but here no such charges. So anytime you can invest and anytime you can take it back. So maybe you can just go to Google and just search overnight funds. So there are so many overnight funds available in the market, which are giving better return than the FD return. Then there are funds called liquid funds. And there is something called liquid Bs. So that liquid Bs, I'm going to show you it is traded in the stock market. So this is a liquid base. It's called Nippon India Exchange Traded Fund Liquid Base. And you'll see this will be always trading around 1,000 rupees only. So 1,000 rupees plus or minus 1 paisa, 2 paisa most of the time. So you want to park your funds, you can park here also. And the advantage is that when you are buying or selling, there will be no government taxes. In stock market, when we trade, when we buy or sell, we pay STT, security transaction tax, stamp duty, and many other charges. But the government of India has given exemption for this particular instrument called liquid base. You don't pay any charges. Most of the brokers, they don't even charge the brokerage. No brokerage, no taxes, nothing. You buy for 1,000 rupees. Anytime you want to sell, you also sell for 1,000 rupees. There will be no loss, there will be no gain. But then you may ask one question, sir, when there is no gain, so why we have to block it? And the interest will be around 3 to 4% for this instrument. So this interest will also be added into the units. Say, for example, you buy 1,000 unit. After 1 month, your interest is, let us say, 10 unit, 10,000 rupees. So instead of paying you the interest of 10,000 rupees, they will add 10 units into your account. So last month, if you buy 1,000 units, this month you look at it, you will have about 1,010 units. So the interest will be given to you in the form of units. So in fact, as far as I know, this is the only instrument where the exemptions are given by the government of India to buy and sell in stock market. So this has to be bought and sold through stock exchange. No STT, no stamp duty, no SEBI charges, nothing. And many top brokers, they don't even charge the brokerage. Then there are some other funds called ultra short-term funds. So ultra short-term funds, by nature, they are very, very short-term in nature. So you can put money there also. So by looking at all these things, the funds which I've given, whether it is of overnight funds or liquid funds or ultra short-term funds, your return is not going to be significantly higher than the FD return. It will be more or less the same. But only advantage here is that it can be liquidated at any time. And second one is that taxation. So the tax outflow will be less. Forget about the companies. Talk about the individual people. Some ultra HNI clients. Some ultra HNI clients, if they have some extra money, if they put it in FD, if their total income is more than 5 crore, the taxation will work out to be 42%. So if they put money in FD, the interest that they're getting, they have to pay 42% tax. But if they put it in these funds, so they'll end up paying only 10 to 15% as the tax. So straight away they say 30 to 35% tax. 30 to 35% savings in tax for HNI clients is a very big savings. But corporate taxation is less. A company's tax, I think, if your profit is less than 1 crore, it is 22%. If it's more than 1 crore, along with the surcharge, it will be only around 25%. So these are the few things available. Now, suppose you have some surplus cash and you don't need that money in the foreseeable future. Maybe you have some lot of funds, you're looking to invest in some real estate or some big expenses, but you have to keep on looking at it, so you don't know when it will materialize. Until then, why to keep the money in bank? So who knows, it may take even 1 year, 2 years also. So for slightly longer term, so what are the alternates? So my favorite one, most of my money, I invest an instrument called Bharat Bond. So maybe I can just show you. You go to this website called Bharat Bond. You just go to Google, type Bharat Bond, you'll get the Bharat Bond Exchange Traded Fund. So it's called bharatbond.in. So this is a very, very famous instrument. In the beginning, as I told you, I'm a trader and I'm a stock market trader. I trade only in options. When I trade in options, I don't have to pay the money to the exchange in cash. I have to give collateral. So majority of my money is put into this, and this is given as a collateral to the exchange. And what is this Bharat Bond? This is an exchange traded fund. You can buy and sell from the stock market. And there are 4 bonds, one maturing in 23, one maturing in 25, one maturing in 2030, one maturing in 2031. Suppose today you go and invest in Bharat Bond. So what is the interest rates that you are likely to get? So in 23 bond is 4.71%, 25 bond is 5.53%, 2030 bond is 6.78, and 2031 6.79. In fact, this 2030 bond, which came about 1.5 years before, and they've given 7.5% interest. So that time I invested a lot of money. So now the interest rate has come down. This is not the interest rate, this is the yield. So I'm sure you know what is the difference between interest rate and yield. So interest rate is the interest that the exchange traded fund will be paying you. But when you buy that bonds in the market, the bond may be trading at a premium or the bond may be trading at a discount. So depending upon whether it's trading in a premium or discount, so the yield will change. So right now, these bonds are trading at a good premium. So that's why the yield has come down. So first, what is the advantage? The number one advantage, so we are getting an interest rate which is around 7%. I don't think that any bank will give you this kind of FD return. So FD returns are much less compared to this one. So the first interesting thing is you have return. Return is much higher compared to other instruments. Number two, just now I told you there are 3 things: SLR, safety, liquidity, and return. So look at the safety, and the money collected from this exchange traded fund is only given as a loan to public sector companies like Power Finance Corporation, Rural Electrification Limited, ONGC, Bharat Heavy Electricals. So there are so many public sector companies. So the money collected from here is lent to public sector companies. So, which is backed by the government. So, safety wise, though we cannot say 100%, even some countries in the world, they've defaulted. So, theoretically speaking, even government of India can default. So, you can say 99.9999%. So, this is safe, safety. Second one is liquidity. I told you FD will have a problem of liquidity, but in Bharat Bond, anytime you can buy from the market and anytime you can sell it in the secondary market. So liquidity is not an issue. Return, yes. That is where this bond scores very well. So the return is better than the bank FD return. Don't only look at the return. And another thing, as I told you, if you park your money in FD, you will end up paying 25% tax on the interest income. Whereas these are the exchange traded funds. So, which will be taxed as a long-term capital gain tax, which will be just only 10%. And that may not even work even 10%. That's because for certain funds, you will be given indexation benefit. I think the Bharat Bond, when it matures in 2030 or 2031, so you can claim the indexation benefit. So if you claim the indexation benefit, then your tax outflow will be very, very, very little. So the tax treatment for the long-term capital gain tax, 20% after indexation benefit or 10% without indexation benefit. So that is a better situation compared to fixed deposit where you will end up paying a full tax. But is everything positive about Bharat Bond? No. So there are some negatives also. So what is the negatives? Number one, when the company is issuing the bonds. So this is a Edelweiss which has issued this bond. At the time of issuance of the bond, you buy, there are no charges. But now you want to buy, you have to buy through the stock market, through the exchanges, but you may have to pay brokerage and other charges. So which is not the case in FD. You go to the bank, you put FD, you don't pay any charges. That's number one. Number two, these are the bonds which will carry the interest rate risk. So maybe I may have to explain what is interest rate risk. Say, for example, this bond was issued at 1,000 rupees, let us say about 1.5 years before. And they promise only 7.5%. So that means about 75 rupees per 1,000 rupees as the interest. For 1.5 years, the interest is around 120 rupees. So along with that interest, 1,000 principal plus interest 120, it should be trading around 1,120, but it is trading around 1,180. Why it is trading at a price higher than the intrinsic value? The intrinsic value here means the principal of 1,000 rupees plus the interest accrued as on date. The reason is that when this bond came about 1.5 years before, the interest rates were slightly higher in the economy. Now the interest rates have gone down. So typically, when the interest rate goes down in the economy, so a bondholder benefits. So the bond prices will go up. But the opposite can also happen. So the interest rate can go higher. In that case, so the bond prices may go down a little bit. This may be slightly difficult for you to understand, but maybe I can just explain in some simple terms. This bond is paying 7.5% interest for 11 years. So invested in 2019. But in between, let us say after 1 year, 2 years, the interest rate increases. So what you can do, you can, if it is FD, normally you put it for 1 year or 2 years. After that, when the interest rate increases, you can put a fresh deposit, you can get the higher rate. But here you commit the funds for 11 years, 12 years for the return promised. And that return will not change for the entire duration of 12 years. But 12 years is a too long period. So interest rate cycles can change, right? So the interest rate change in the economy will affect the prices of the bond. Sometimes it can work in your favor. I think this time it has worked in my favor, and it can go slightly against you also. So that is the thing. So positive points, you are getting good safety, good liquidity, good return, good taxation, good tax benefits. And negative things, not necessarily purely negative, sometimes it can be positive also. The interest rate changes in the economy, so it may affect the bond prices. So this is all about Bharat Bond. And in my case, so what I do, I put my money in Bharat Bond, and this Bharat Bond is given to the stock exchange as a collateral. So based on that collateral limit, I do the trading, and I do make some profit in the trading also. But I have the option of putting the money in FD and giving FD as a collateral to the exchange also. But I don't do that. So that's because I have a large sum of money, typically running into crores. So if I get a lot of interest, then again the taxation will be an issue. So Bharat Bond is a tax efficient and higher return. So I just used to tell my funds is roughly about 25 crore. If I put it in FD, if I get 5%, if I put it in Bharat Bond, if I get 7%, so that 2% extra money for 25 crore, that will work out to be 50 lakh rupees per annum. And 50 lakh rupees per annum, I can buy one Mercedes Benz, right? So this is what I told you, when you are operating on a bigger scale, some small things can have a very big impact. Then, so why this Bharat Bond can be given as a collateral to the exchange? So that's why I'm more interested in giving the Bharat Bond. Then there are some long-term bonds, and both PSU bank bonds and as well as the private sector bonds. So maybe I can just show you. So there is a website called Golden Pie. So this website, you can actually they buy and sell the bonds. I think I have to log in, so or I have to do something. So let us say I just type individual or bond. So I don't know why they ask so many questions. Earn higher income from than FD. So maybe I put more than 50 lakhs. So probably I should have done this. I think I skip all these things. So you can see Muthoot Fincorp offering 11.51%. Uttar Pradesh Power Finance Corporation 8.8%. So there are a lot of bonds available. So you can see IDBI Bank offering 8.34%. So there are so many bonds which are available in the market. So there are online portals like this, so where they sell the bonds. Okay, so you can invest in those bonds, and typically you can get anywhere from 8 to 11%. So 8 to 11% depending upon the risk profile of the corporates. In fact, I'm not just showing, later you can go and check yourself. There are public sector banks like State Bank of India, Punjab National Bank, Bank of Baroda, Canara Bank. So these banks' bonds are called Tier 2 bonds. And those bonds are available for about 9% return. So again, 9%, 10% is a very, very decent return compared to 4% or 5% in FD, plus the taxation benefit. These are all the bonds which will be treated as a long-term capital gain. However, corresponding risk is also there. Just to give you the recent history, in the recent past, there were two banks which had a lot of problems. One is Yes Bank, the other one is Lakshmi Vilas Bank. So the government had to step in, so they had to do a lot of things. But finally, all the bondholders were told that they lose their money. They don't get even 1 rupee back. All the depositors got the money, but the bondholders did not get the money in both Yes Bank as well as Lakshmi Vilas Bank. So that is why you are getting higher interest. There is a bank called South Indian Bank. I found that their Tier 2 bond is trading around 13% interest. Right? So typically, so these bonds trade around like 8% to 12% return, which is almost more than 2 times your FD return. But of course, bonds carry slight risk, and usually there is no risk, but if the bank goes bankrupt, okay, so shareholder will be the last one to receive the money, and the bondholders will be the second last people to receive the money. So that risk is there. So you go to Google, you find out, so there are so many people like Golden Pie and many other people also. Once upon a time, these investments are restricted to only ultra HNIs, only institutions. But the portals like Golden Pie and other portals, so they bring it to the retail investors. So of course, there are certain bonds, there will be a minimum investment. I think minimum investment, some bonds minimum investment is 2 lakh, some bonds minimum investment is 10 lakh, or something like that. So that is also one small negative things. So if you are looking to invest in bonds, I think better you can keep PSU bank bonds. You can more or less assure that PSU banks will not go bankrupt. Even if it goes, the government will save them. So safety wise, it's more or less safe. Liquidity may be a slight problem, because when you are buying from the portal, so you have to approach these portals if you want to sell. It is not as liquid as Bharat Bond, where it is being traded every day in the stock market. So liquidity wise, it's slightly problem. Return is too lucrative. Return is much better than the Bharat Bond. Then you may ask one question to me, sir, when you say returns is much better, then why do you invest in Bharat Bond? Why don't you invest in PSU bank bonds? But these PSU bank bonds cannot be given as a collateral to the exchange. So as I told you, my primary business is not investment in bonds. My primary business is trading in stock market. So this is a passive investment. So that is the reason why I don't invest in PSU bonds, but I do invest a lot of money in Bharat Bond. So in addition to these bonds, so if you are very much interested only in fixed deposit, so instead of going for a bank fixed deposits, you can also go for some corporate fixed deposits. So say for example, Bajaj Finance, Sriram Transport. So there are some good quality companies offering FD. Usually they offer 1 or 2% more return than the bank FD. Right. So as I told you, once again, it becomes an FD and the taxation will be high. So that's why many companies, instead of using the word fixed deposit, they use the word bonds, like Muthoot Finance. So these are the companies, many times they issue some bonds. They give very attractive interest rates, so anywhere from 9% to 10%. Of course, now the interest rate has gone down in the economy. I think last time they've come, I think around 8.759% like that. But still, that's far better than the other things. And on top of which, these bonds are traded in the stock market. So when these things are traded in the stock market, you know, anytime you want liquidity, you want to get out, you can just dispose it off. So I've been explaining many things, you know, bonds, mutual funds, debt funds, corporate FDs, right? So please understand the risk and reward. So everything has got different kind of rewards and different kind of risk associated. So please consult your financial advisor and before investing. Okay. Now I'm going to throw a few more very interesting thing. I don't know how many of you have heard of this one called REITs. REITs stands for Real Estate Investment Trust. So there are few companies in India. So we have 3 listed companies in India: Embassy, Mindspace, Brookfield. These 3 companies put together, they are holding 15% of the commercial real estate in India. So they also come out with initial public offering. People have bought it, or you can also buy from the secondary market. So what is the advantage in this? This becomes an alternate investment for investing in real estate. So in this fund, if you invest, I'm not going to explain everything in detail. This REITs is the one collecting the money from the public, and they don't directly invest in real estate mostly. They form a special purpose vehicle, and through that special purpose vehicle, they invest in real estate. They do get 3 types of income. One is interest income, one is the amortization income, and another one is a dividend. So normally the dividend income is taxed in India. You need to pay 10% capital gain tax for long-term capital gain beyond 1 lakh rupees. So first 1 lakh rupees will be free, and beyond 1 lakh rupees, you have to pay 10% tax. Right. I'm talking about the capital gains. Sorry, I think I got mixed up. So dividend, you have to pay tax full. Capital gain, tax is 10% or 15% beyond 1 lakh rupees for long term. So these people give 3 types of returns to the investors. So one amount they give in the name of interest, one amount they give in the name of amortization, and one amount they give in the name of dividend. So there's a special provision for REITs that the dividend is non-taxable. So when you give three types of returns, amortization and dividend, both are non-taxable. So only around 1/3 of your income, which you receive in the form of interest. So only that will be taxable. So I always tell, if any young person comes to me, if he says, sir, I want to buy a property for a house, I always tell, and I'm just giving a simple example. Assume that a person in US has about 1 crore cash, and assume one person in India also has 1 crore cash. So an Indian guy who is having 1 crore cash, you go and buy an apartment for 1 crore. And what is the rental return you can get? The most you can get only 2 lakh or 3 lakh per annum. Whereas if you put the money in FD or any other instrument, you will get 6 lakh, 7 lakh very easily. So your rental return is only less than half of the FD return. The same in US, a guy is having 1 crore cash. If you go and put it in bank FD, he hardly get 0.25%. But whereas he put it in real estate, his rental return can be 6-7%. So in developed economies, the interest rates are very, very, very low. So they don't have any incentive to put the money in FD or any other fixed instrument. All the fixed instruments will be having very, very less return. So they go for real estate. But in India, the interest rates are high. And why you have to go for real estate? You can just put it here. And then you can just live in a rented apartment. And this will give much, much better return than that. Today, I read a very interesting article. There are people who buy the house because they have their own house. They cannot change their own house. So when their possessions they are being transferred from one place to another place, they travel a long distance, that reduces their efficiency and this and that. So it's only a social stigma. Okay, I have to live in my own house. Otherwise, nothing wrong if you live in a rented house, at least in India. Okay, the rentals are so cheap, but whereas apartments are so expensive. But let us say a person may argue, sir, I may be getting very little rental or I may be saving a very little rental. But what if there is a capital appreciation? You don't get capital appreciation in bank FD. In real estate, I can get it. So what I suggest them, okay, if you think that capital will appreciate, the real estate prices will shoot up, then instead of buying a physical property, invest it in these REITs. So REITs is nothing. They collect the money from you, they go and invest in real estate. Mostly shopping malls, office complexes, like that. So if the price appreciates, so that will be reflected in the REITs prices in the stock market also. So you can also get capital appreciation, on top of which you can get around 6% yield. I don't think that anywhere you get 6% yield, rental yield in India. So REITs is something really very interesting one. And similar to REITs, REITs framework, it has 3 components: sponsors, manager, trustee. Taxation for REITs, dividend or tax exempt for REITs. Dividend distribution makes dividend, loan amortization plus interest. Only the interest is taxable. So similar to REITs, there's another one is called InvIT, Infrastructure Investment Trust. Say, I'm just giving an example. Let's say Chennai to Bangalore, there is a highway. What happens? A company lays the road from Chennai to Bangalore. and the government asks the company to take care of all the expenses, maintenance including, and then they collect the tolls. So they invest a lot of money, construct the road, and then they collect the toll. That becomes their income. So what happens? So these roads will be sold to you, which means you become a part owner of the road construction project. Whatever the toll is collected, so that will be distributed to you as a dividend. So there are two invites in India as of now. One is IndiGrid, which was the first listed power sector infrastructure investment trust. And there's one other one is PG invite, Power Grid Infrastructure Investment Trust. So in fact, the Power Grid Infrastructure Investment Trust, I have invested. I think I've invested about 5-6 months before. So it was issued at the rate of 100 rupees, now trading at 121 rupees. So which means I got 20% appreciation. In addition to this, so these invites, they are mandated to give you the dividend 2 times in a year. Every 6 months, they have to distribute. And approximate yield is around 8 to 10%. So you are getting 8 to 10% return per annum, on top of which you can also expect some capital appreciation. So I personally invested some money in this invite, and which has been doing very, very well. So once again, going back to the basics, SLR, safety, liquidity, return. So safety is more or less safe because your money is backed by the property, backed by the project. So unless one earthquake comes and the road is getting destroyed, the road is always there. So your safety. Liquidity, as I told you, so these instruments are being traded in the stock market. So anytime you want to get out, you can just dispose it off. And return, no need to say. Return, you are getting 8 to 10%, on top of which you are also going to get some capital appreciation. So put together, you can get anywhere from 10 to 12%. The 10 to 12% is a fantastic return for the surplus money that you are holding it. So corporate, I told you, short-term funds, long-term funds, and corporate FDs, REITs, invites. So you have a lot of opportunities. But then finally, as the Mr. Venkatraman, who introduced me, who said, he should have listened to me 1.5 years before. And because the stock market has given a fantastic return, right? So even in stock market also, you can get better return. So of course, this is not the platform for me to talk about the stock market in detail. And even if you do not have any knowledge, you can just invest in some ETFs, Nifty ETF and something like that. So you see, India's benchmark Nifty is up by 45% in last 12 months, 19% on year-to-date basis, as per a report in Economic Times. Indian benchmarks have outperformed the developed markets, MSCA World Index by 15% and 29% respectively in the past 12 months and year-to-date respectively. So you may say, sir, I don't have a knowledge to invest in stock market. Okay, you don't have the knowledge to study about the stocks, the companies, their performance. You just simply close your eyes and then you can just invest in some index funds. So maybe if you want to take some slightly higher risk, so there are some funds, where they invest 40% of their 50% of their corpus in equity, 40% of their corpus in debt, 10% of their corpus in gold, So a mix and matches. So there are a lot of things. So a lot of low risk investments, even in stock market, is also there. And then there are some mutual funds called hybrid mutual funds. So in those hybrid mutual funds, say they put some money in equity and some money in debt. So they also typically tend to give about 10 to 15% return with a liquidity. So anytime you want to get out, you can get out. And of course, once you get into this, then you will know how to do the hedging, right? So through the hedging, you can make a lot of money. So when I said hedging, I remember many of your companies may be involved in import and export. So with a little bit of study, knowledge, you can actually hedge your forex risk through the forex trading in stock market also. I do have a lot of NRI friends who are worried about Indian rupee being depreciated. So I teach them how they can do the hedging in the currency market. So of course, that's a part of a hedging. So that's altogether a different thing. So there are so many ways, so except putting the money in fixed deposit, particularly South Indians, they want to put the money on gold and real estate, nothing else, right? So there are so many other ways of parking your funds, short term or long term or medium term. So there's so many things you can do. So in general, tap the equity markets, study and expand the geographical reach. You're right. So personally, I'm a very risk-averse person. So I don't take much risk. So that's why I tend to invest a lot of my money in debt instruments. I take the risk in trading in stock options, but not in other areas. So I hope you enjoyed watching this video. So we can take some questions now. Mariappan?
Yes, sir. Thank you, sir. Venkatraman, sir, sir, there are questions in the... Venkatraman, sir, you are muted, I think. Please unmute.
Is it audible now?
Yes, sir. Yes, sir.
So thank you very much, sir. In fact, it is a very insightful session for the past 1 hour. In fact, we have touched upon all the financial planning methods of what MSME and what the individual investors as well as the companies needs to do. Very insightful, particularly when you talk about the overnight funds, liquid funds, ultra short-term funds, and the long-term as well as Bharat Bond, which is an eye-opener. Particularly on tax planning and things like that. Of course, corporate FDI you mentioned about, many people used to resort only on real estate as well as the FD in South India. I think when you touched upon the rate, which is Embassy and Mindspace and Brookfield, I think that is a new thing which we have learned. And also, you have also touched upon the infrastructure trust funds, which is non-index as well as so many things you have touched upon on the stock markets. Of course, I think people would have more questions on stock markets also. So now the floor is open, and I think we have 455 participants attending this session. So we may not have all the questions answered, I know that, but let us take a few questions which are already available on the chat box. Mariappan, could you help Mr. Sundar in picking up the questions, if you don't mind?
Yes, sir. Sir, shall I read out the question, sir? Mr. Sundar, sir?
Yeah.
Sir, can these PSU bonds be pledged and can we take trade? One person has asked.
No, in stock market, they don't accept PSU bonds as a collateral.
Okay. What is the interest for pledging and what is the risk? One person has.
Now, for pledging, there is no interest.
Okay. What about gold sovereign bonds?
Yes, gold sovereign bonds is, it's another good investment. Okay. I did not touch upon the gold investment bond because That is not a debt product. That's an equity product. The price can change as per the gold prices. So like you get 2.5% interest for your money plus the capital appreciation or the depreciation as per the movement of the gold price. Yeah, so sovereign gold bond is also a good investment.
Okay. Can REIT is used as collateral or EIT?
Yes, sovereign gold bond can be used as a collateral.
Okay. So one more person has asked, this Bharat Bond also carry risk like equity prices? Means can its price erased?
Pardon, can you please repeat?
The Bharat Bond,
Hmm.
does Bharat Bond also carry any risk like equity prices? Means the price can be erased.
It cannot go so low, but as I told you, as and when there is a change in the interest rate in the economy.
Okay.
Okay, so the bond prices tend to change a little bit, but not so much.
Okay. One more person has asked, REIT and IN invites collateral is possible for options trading, sir?
No. If for anything collateral possible, so the exchange has to approve. So far, exchanges have not approved these products for collateral.
Okay, thank you, sir. And after pledging the share, the dividend paid by that share will I get or not?
Yeah. Anything nowadays with a pledge, okay, whether dividend or interest will come directly to you.
Okay. One more person has asked your view about today's Bajaj Finance breakdown. Any idea about?
This is not the platform to talk about Bajaj Finance.
Okay.
Right.
Okay, sir.
Right.
Okay, sir. And which platforms to use to invest in REIT and InvITs?
There are only two ways. One, when the company is issuing through IPO, or you can buy and sell directly from the stock market.
Okay.
Just like you buy some other shares, you have to buy. Just now I show you, right, that the PG invite.
Yes, sir. Okay.
It
And
can be bought through your broker.
Okay. And how to get a liquid margin for trading options? Which is better option, liquid base or anything else?
No, the question is not very clear.
How to get a liquid margin for trading options?
I don't understand the question. What is the meaning of liquid margin? So probably he has to
maybe
put the
he
question
can
properly.
read properly again. Okay.
Yeah.
Just a minute, sir. If Bharat Bond is withdrawn before maturity period, will we get partial interest?
Okay. You see, Bharat Bond is a cumulative instrument. Okay. You don't get the interest every 3 months or every 6 months. Okay. So the interest will be reflected in the capital appreciation. So I bought a Bharat Bond for 1,000 rupees. Okay. I'm not getting any interest. But the Bharat Bond from 1,000 rupees, it has gone to 1,050, 1,100, 1,150, 1,200, right? So today, if I'm exiting, I will be exiting at 1,200. So I'm already getting 200 rupees extra money. So that is the interest for me.
Okay.
Otherwise, it's a cumulative nature.
Okay. One person has asked, I am an importer. How can I benefit from hedging if rupee depreciates?
Okay. That may be a very big topic. So maybe you can pass on my mobile number to him. So he can keep in touch with me one-to-one. I can help him. So like here explaining all those things, it's going to take a lot of time.
Okay, fine. How much secured are AA rating bonds?
Like AAA, AA, single A, that itself tells you what is the safety, right? Okay. So like I'm not better than those credit rating agencies. So there are credit rating agencies like CARE, so they study. So naturally the AAA is the best, AA is slightly lower than AAA, etc., etc.
So which should be better, Nifty Bs or Bharat Bond 2031?
Pardon, can you please repeat?
Which would be better, Nifty Bs or Bharat Bond? 2031. That
Nifty Bs and Bharat Bond, like it's just like comparing an apple and oranges.
okay.
So Bharat Bond is a debt instrument. Okay. So
Okay.
you only get the interest. But whereas the Nifty Bs is an equity investment.
Okay.
Right. Like if I ask you one question, okay, which is better, to put the money in bank FD or to put the money in share market? Which is better?
I
It
prefer
cannot be
share
compared,
market.
right? Putting the money
Yes,
in
sir.
share market is a equity investment.
Yes, sir.
And putting the money in FD is a debt instrument. So debt and equity, they are two different things. So the same way, Nifty Bs is a equity.
Okay.
And Bharat Bond is a debt. So debt and equity, they both have plus points and minus points and many other things. So which cannot be compared. We cannot say which is better.
Okay. So one more interesting question. Apart from this stock, how did you manage your teaching profession and learning and stock markets and investments?
Yeah, but see, like what I say, I just used to tell, right? In a movie, if a girl go and act as a sister character, then forever she'll be stamped as a sister character only. She will never get heroine character, right? Because like we all have multi-talent, so we are all having multi-talented person. There's some bit of training and this and that. So I'm sure like everyone can shine in 2 or 3 different fields, right? So like you see there was one guy called T. Rajender, in a movie. So he does 7 or 8 or 9 things in the movie. He writes songs, he writes direction, acting, like. So it's not something difficult. So if you have an interest, if you have a passion, I'm sure you can learn anything in this world and you can become an expert, right? So
Yes,
who said that teacher cannot do? So our country is a country which, a teacher has become a president, right? Sarvapalli Radhakrishnan.
yes.
So incidentally, Sarvapalli Radhakrishnan and myself both studied in the same school.
Oh, fine.
Right? Yeah. Okay.
Okay,
I hope I've answered the question.
Yes, sir. Yes, sir. Actually, there are repeatedly same questions related to the Bharat Bond and that, sir.
Yeah. So maybe what they can do, they can just send us a mail so that
yes,
we
sir.
can just.
That would be better.
Yeah,
that would be better. Actually, we have
because the
posted
same question we keep on answering, it won't look nice, right?
Yes, sir. Yes, sir.
Yeah.
We have posted a poll. Maybe participants can answer the poll so that we can give better response in later also. So
Yeah.
Mr. Venkatraman, sir, please.
In fact, you can able to spare your valuable time in answering as well as this session. It's very useful to all the participants. In fact, there are a lot of questions and queries still going on. I could see it in the chat box. That shows that your session is very quite interesting, and also people wanted to know more about this subject. So nevertheless, I think you are reachable on your mobile number as well as email ID. Many of them asked Mariappan whether this is available on YouTube. I think this is recorded and we can share with the participants, correct?
Yes, sir. It will be put it in CAA's YouTube page, sir.
Okay.
In
So
CAA
that
YouTube
maybe
page, it will be there. Yeah.
yeah, maybe you can send a link so that people can view it and these things. So thank you very
Sure.
much, Mr. Sundar sir, for your valuable time and also a very insightful session. And thank all the participants. Despite we have a what do you call mid of the week, I would say the participants is almost reached 500. I would say it's like a here also it's like a stock market. It reached 500, now it is
Yes, so that's
379.
common.
Okay, yeah. So that's a very interesting and thank you all the participants. Thank you CA organizers and thank you all. Sir, we will also keep in touch. Thank you, sir.
Okay. Thank you. Bye.
Bye.
Thank you very much, sir. Thank you.
Thank you.